This is the Professional Edge, and we are talking about Let's Eat. E is for estate plan, A is a financial plan, and T is a tax plan. My name's Todd, a tax attorney, CPA, and certified financial planner, host here on the Professional Edge. So what we've been talking about is a financial plan. So what does that actually mean for our listeners here on the Professional Edge? That means that we sit down and actually gather the information on the assets in which you currently have, your old 401k that you have not looked at since you've left that old place of employment 5+ years ago. Yes, you know who I'm talking to. You say, yeah, I was going to get around to moving that, reallocating that. I haven't really pulled that statement. I don't even know how to log back into my 401k account. And again, you're leaving money on the table because that is not being actively managed or looked at. So when you set it and forget it, that is costing you real dollars. So if you are one of those individuals who have that old 401k, you haven't looked at it, you know who I'm talking to, and somebody's hitting you in the rib cage with their elbow saying, yeah, that's you, he's talking to you, we need to do something. Well, that's the impetus to get started, and the way to get started is give our office a call at 877-654-9798. That number again, 877-654-9798. Now, when we roll that over to your self-directed IRA, that is part of your A financial plan. How are we going to structure that? Before you make that move, make sure that you understand what an NUA possibility is, and that is a net unrealized appreciation. We've done this for clients in the past, and we've saved them close to 6 figures in tax dollars. Yes, 6 figures in tax. So therefore, we're doing that a financial plan, but the T in our E.A.T is also a tax plan. So just nilly-willy calling that 1-800 number to roll your 401k over, they're going to help you. Well, they're not qualified and they're not licensed to give you tax advice. So if an NUA option is available, and you leave that on the table and you do that IRA rollover and you don't do it correctly, you just blew the NUA ability, and therefore you may be overpaying your taxes. Again, being a tax attorney and a CPA, being a registered investment advisor, we put these disciplines together at estate management counselors. So again, back to a financial plan. So part of that is you have that old 401k, you have your current active 401k, and you have your investment options. Are you actually allocating them to the right options? We've seen individuals that move to safety, that stable value fund over the past 2-3 years, and they were getting ready to reallocate it and not really knowing, sort of like jump rope, when to get back in. You got to time it right. Well, I'm not sure that there is the ability to time it right. But if you've been in that stable value fund, or you've moved 80-90% to the stable value, and you're still waiting to get back in because of the election, because of the tax law change, because of the Senate race, well, I'm not sure that's really a financial plan. That is just reacting emotionally. You need to be disciplined, just like planning your vacation. You sort of plan out what connecting flights you're going to need, when the ship is going to sail, or when the event is going to be that you're going to attend. That is part of a plan. And therefore, why leave your safe and secure retirement to chance and not have any sort of plan, any sort of guidelines? Yes, it's going to ebb and flow, but we at least have a point in time and an amount, and then a distribution strategy if you are that retiree or getting ready to retire. Let's put it in writing. Let's see how it works out. See how $4,000 per month in retirement, and see how much you're going to need if you're going to retire for 20 years. Unfortunately, this is the first generation that has to plan for 20 years in retirement. Yes, that is 20 years of retirement. And the startling number, which we've talked about here on the Professional Edge, is every day for the next 12 years, every day, think about this, every day for the next 12 years, we have 10,000 individuals turning the age of 65. 10,000 per day for the next 12 years. Yes, this is the baby boom generation. If you know or are familiar with the villages down in Florida, they can't build this place fast enough. It is an active retirement community that is very active. They enjoy life because they have a plan, a financial plan. So let's eat. Let's get your estate plan in order, get a financial plan, and also have your tax plan in order. And to do that, what we've done here on the Professional Edge is we've set up a website. It's called emcthebundle.com. It's Echo Mary Charlie thebundle.com. And we've combined these three together to get your estate plan done. We put the invisible blanket over a lot of our clients' estates. That means we plan their estate with a revocable living trust, meaning it's a private document. Therefore, we avoid the probate court process. We avoid ancillary probate, and we administer that estate very efficiently. That's number one. Number two, we do a financial plan, just like we're eating. Let's eat, E.A.T. A financial plan, we run an analysis. We also do a Monte Carlo analysis, which is basically, can your portfolio withstand random rates of return over the course of your retirement? Yes, we all know the market is random in its rates of return. So therefore, we don't apply let's say your portfolio returns 7% annualized over the course in time. That is voodoo. Basically, we know that the market is not going to return 7% every single year. It may go up 10, down 3, and up 12 the following year. That's going to be a 7% annualized return. But those variations may have a dramatic effect, and what happens, sequence of risk is a return. Sequence of return risk is when you start your retirement. Think back a year ago. If you started retirement January 1, COVID hit, your portfolio was down 30% in the month of March. Wow, what is that going to psych you out? Especially if you had $1 million portfolio and you're down $300,000 3 months into retirement. You're like, well, I'm going back to work. I can't afford to retire. Well, that's where we do that analysis, a financial plan. And we run that scenario and say, what is the probability of success that you are not going to run out of money before you run out of time? So again, having that structure in place, are you taking the distributions in retirement from the right accounts? A lot of individuals are now of the mindset that this large standard deduction might go the way of the dodo bird. It's a big gimme to a significant number of taxpayers, especially retirees. I mean, their tax obligation has decreased dramatically because you paid off your house, you are in a low tax area for real estate taxes, and you're very comfortable. So you're not qualifying for the itemized deduction, so therefore you're taking the standard deduction. So the money you give charity is not helping you out tax-wise at all. It's just that you are kind and you're charitably inclined. So how do we structure that differently? Well, if you have a required minimum distribution, part of that tax plan on E.A.T, E.A.T, estate plan, a financial plan, and T, a tax plan, then we say let's direct part of that to the charity of your choice, and therefore we avoid including that in your taxable income. It's simple structure. We need to do it properly up front, and again, being the tax attorney and the CPA, the RIA, Registered Investment Advisor, we structure that to where A, it's not going to be included in taxable income, and you actually get the benefit of making that charitable donation, a tax benefit on that structure. So again, the 1-800 brokerage firm that you're doing it all yourself because, quote, you're saving money, or the brokerage firm that, if I said the names, you would recognize them. They're household names. They've been around. They're the old stodgy brokerage firms. They all give you the disclosure. They do not provide tax advice. So again, being a tax attorney and a CPA and helping clients with their investment portfolios, I do not understand the concept of making financial decisions without taking into account the tax consequence. And that's a unique thing that we do at estate management counselors. And again, we're talking about let's eat your estate plan, a financial plan, and your tax plan. And we've coordinated that and put an incredible offer to our listeners here on the Professional Edge, and that is emcthebundle.com. That is EMC Echo Mary Charlie thebundle.com. And that's where we've taken these three. If you would buy these individually, it's over $10,000 of cost. And we've done them time and time again. And we've earned the $10,000 because individuals basically do the cafeteria plan. They pick one and then they go to the next one and then they go to the third one. But this is our incentive to get you to take action and let's eat. Let's get your estate plan done. Let's get your financial plan and do your tax plan. So that information is at emcthebundle.com. Echo Mary Charlie thebundle.com. So part of that financial plan, a financial plan, is let's run the analysis to see what $4,000 per month spendable. You want to retire at the age of 62, have $4,000 a month spendable from your account. But let's also keep into account the inflation rate risk. That's the other silent thing that is going on, which is detracting from your ability to have that safe and secure retirement. That will, impact how much money you're going to need 15 years from now. Because we all know things cost more in the future. So therefore, we need the same purchasing power. And that's where we run that financial plan. And to make sure that you're going to have the same purchasing power of $4,000 a month today, 15 years from now. It is shocking what number you have to bring in monthly to have the same purchasing power at a 3% inflation rate 15 years from now. And again, unfortunately and fortunately, we are the first generation which has to plan for 20 years in retirement. And that planning, it's not to wing it. We can't just wing 20 years of planning. We don't go on 20 years of vacations without a vacation plan in place. We know where we're going. We know sort of the stops we're going to go to. We made our reservations to get at these certain destinations at a certain point in time. It's the same thing with a financial plan. We need sort of road marks to hit as we go along. So if you're 50 years of age, listening to the Professional Edge, are you on track to retire at age 62 or 65, wherever it is? I think I would want to run the math and run the numbers in my own financial plan to see where I am to make sure I'm on track. And if it required another $100 of savings per month until the age of 65, I'm willing to probably do that. I'll skip lunch. I'll take a brown paper bag and put a peanut butter and jelly sandwich in there. That's not a big deal if that's going to get me to my safe and secure retirement. So again, we don't know those numbers until you run that plan to actually have a plan. And unfortunately, your safe and secure retirement is your responsibility. It's not up to Social Security. The pension that's going to pay you the rest of your life, that's gone the way of the dodo bird. So therefore, the risk is placed upon you, the employee, the person listening here on the Professional Edge, to build your own safe and secure retirement. And the demand is going to be there because as these baby boomers retire, they're looking for income. They're not looking for growth. They have to, growth in the account is not going to allow them to pay their electric bill and to give the grandchildren presents on their birthdays. So therefore, they're going to be looking for income distribution. So that's going to affect the investment environment going forward. Trust me, mark my words on that. We'll replay this about 10 years from now, and the demand for income producing assets in retirement will be significant. So again, you as a listener here on the Professional Edge, let's eat. Let's get your estate plan in order. The A stands for a financial plan, and T stands for a tax plan. So the best place to get started is emcthebundle.com. That is Echo Mary Charlie, thebundle.com. We've combined these three disciplines together as a unique opportunity for our listeners here on the Professional Edge to take advantage of that. If you like what we're hearing and you want to have a private discussion, you're welcome to give our office a call at 877-654-9798. That number again, 877-654-9798. We can either meet in Atlanta if you want to journey in and challenge the traffic. We can meet down here at the Cunningham Center in Columbus. Or with the advent of Zoom meetings, we are welcoming those as well. So again, 877-654-9798. That number again, 877-654-9798. My name's Todd, host here on the Professional Edge, tax attorney, CPA, and certified financial planner. Thanks for listening.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Scene, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Scene is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach estate management counselors and speak with Todd by calling 1-877-654-9798. That's 1-877-654-9798.